Welcome back to Squawk Box. Bitcoin this morning hitting a new high above $123,000. Joining us right now on the move and what it means. Anthony Pompliano is here as the founder and CEO of Professional Capital Management. Good morning to you. I guess as Joe said, if you're going to get to 250,000 or 500,000, you got to cross 123 at some point. But what do you think is happening? What's driving it right this moment?
First of all, welcome to the greatest show on Wall Street. I think that Wall Street's full undivided attention now is on Bitcoin. And really, there's three things that drove this move. The first is that there's been record inflows into the ETFs. So last Thursday, 1.2 billion, second highest day. Those ETFs now collectively have over 140 billion. BlackRock's fund is now almost $90 billion in about a year. They went from not having a Bitcoin ETF to now they have a top 20 largest ETF in the world. So there's a lot of inflows there. Second thing is the options expired at the end of Q2. And so all that downward pressure on Bitcoin obviously goes away. That helps kind of like a beach ball getting put underneath the water, right? Obviously it can pop back up. And then the third thing is that there was a lot of short sellers. And you started to see that build up. And as they got blown out, as Bitcoin ran, you get into this price discovery phase. And if you go back to November, we went from 70,000 to 90,000 in about 2 to 3 weeks. And 70,000 was a new all-time high. What we're watching now is we broke through that $110,000 range. That was the previous all-time high. I don't know if it goes to 140, but it sure is going to make a big move here because you are in a true price discovery phase.
And how much of this do you think at this point then gets driven by ETFs, or do you think it's really more going to be individuals buying the underlying asset?
Well, the reason why I call it the greatest show on Wall Street is everyone wants Bitcoin. Like, this is no longer a contrarian trade. This is a consensus trade now. And so you have the ETFs, you have the Bitcoin treasury companies, you have retail, you have sovereign wealth fund. Everybody wants Bitcoin.
Should we be scared of that? Meaning, you know, we were talking about just economists and analysts. We're like, you know, when the economists have a consensus view, you usually should go the other direction.
Yeah, well, the economists still don't like Bitcoin, so I think we're okay. But if you take a look at, you know, the S&P, everyone wants the S&P, right? And so what you want is you want persistent kind of price-insensitive buyers, and that's finally what Bitcoin has. And it's not just coming from retail investors; it's also coming from these institutions, and I think that'll continue to drive the price.
Does it matter what Congress does anymore?
I think that Bitcoin has always been a decentralized asset that really didn't care what anyone else did.
But part of the bullishness was in friendlier administration, friendlier Congress.
Oh, it definitely helps. It definitely helps, right? If you had to choose.
Is the bill going to pass?
Is what?
Is the bill going to pass, the one that's pending?
I think that the bill will pass, but again, the bills, most of the bills are actually not addressing Bitcoin in particular.
Right.
Stable coins, market structure, things like that.
General crypto universe, though.
Yeah, look, obviously having an administration that created the Strategic Bitcoin Reserve, leaned into Bitcoin, I think is a very bullish element. But I don't think that Bitcoin was going to go down or not work if the administration wasn't positive on it.
You see Superman named his dog Crypto. I'm not kidding.
Should have named it Bitcoin.
No, it's with a K.
With a K
Different.
after kryptonite.
Yeah. Why would Superman name his dog after kryptonite?
To prove that he can try.
No, maybe it's after Krypton.
Oh, yeah.
The planet.
Probably
After Krypton.
I got a question.
Which of the bills, there's two bills that they're focusing on. There's one that's probably easily going to get through. The other one will require help from Democrats.
Yeah.
And where do things stand on that? That may be a heavier lift.
So what's really interesting, I interviewed Patrick McHenry a couple weeks ago, and what he said is they split this. It used to be one idea. They split it into two things because he thought it'd be easier to get the stablecoin thing through first.
Right.
He actually thinks that they should put them back together now, that their support, and go ahead and get it approved. I don't know if that will happen, but I just think that there is so much momentum around this that it becomes a situation where there's more pain rather than anything if you don't support this. Like, it is very obvious. I tweeted right before I came on. Warren Buffett is sitting on 5% of the treasury market. Boomers are buying up bonds. Young people are gobbling up as much Bitcoin as possible. What do you think young people care about? They don't care what happens in the bond market nearly as much as they care about what happens in the Bitcoin market. And so I think that politicians are not stupid. They understand that the future constituency that they have cares about this sector, and they're going to lean it.
Politicians are not stupid. That's quite a statement. Can you prove that?
You pick which ones you like and which ones you don't.
Anthony, I don't know if you want to weigh in on it, but obviously we just had Bob Diamond and his colleague on 2 minutes ago. The idea of whether custody for coins should be living inside of a Coinbase style, somebody else doing it for you, effectively like a bank, if you believe that without the FDIC insurance, I should say that up front. Yeah. Or whether you should effectively own it yourself, put it under your mattress with some kind of protections around it if you believe that there are.
Yeah. Well, I think that there's different people in the market. Now, the hardcore Bitcoiners, right? And I fully believe in self-custody. You should have the right to, and you should learn how to actually take control of those coins, be able to move them, hold them, secure them, et cetera. And so self-custody is a key part of Bitcoin and the value proposition to the world. At the same time, we live in a real financial regulated world where there's a lot of investors and LPs that are not going to let a fund manager or a public company have, a CEO who's walking around with the private keys. And so there are going to be these qualified custodians, third parties that people use. And so it goes back to what are you optimizing for and what are the limitations placed on you? Again, a public company is very different than an individual. I think individuals should go learn about self-custody. We should also recognize that public companies are in a different situation.
Okay. Anthony, great to see you. Appreciate it.
Thanks for having me, guys.
Bet.